Hey traders, Raghee here, and in this recap video, I'm going to cover 3 of the most asked about markets that I have got. I'm actually going to give you 3 trades today. You can follow along. I'll break down some of what the setups are and the zones, and you can see how these things work out. All right, so the 3 most asked about markets I have got, to no surprise, are some grains, wheat, beans, and the third, of course, gold. All right, so I'm going to go through these 3 trades with you here in the recap video. Starting off with gold. So we've been waiting for an opportunity to short gold, and the red grab candles, the angle of the wave, everything about this says it's a kind of shaky but bearish market. So I want to wait for a correction. The mantra is from a trend trader like me is healthy trends correct, and it's at these corrections that we find our opportunity up in here, right? Kind of the X marks the spot, if you will. So we've finally reached the zone that I want to engage. And that zone, let me show you here. This is a very objective zone. It's not one that is drawn by, any subjective tools. There's no trend line here. There's no fancy patterns that can be interpreted 100 different ways. This is just about things that are plotted in a very systematic, I'm going to clean the chart up here, very systematic, and in fact, these are all automated. None of these were drawn manually. I've got a series of moving averages and the Darvis. So take a look. I've got my Darvis high right here. I've got my 34 EMA wave on the low right there. I've even got a 20 period simple moving average right up in here. Actually, right there. It wasn't straight. So that's my zone. Okay? And it also allows me to take advantage of my favorite swing short, which is a market correcting to my 34 EMA wave. So my zone here becomes 1240 to 1235. That's the zone here. Basically looking at the 40 level. Let's see, wrong drawing tool. There we go. 40 level to 35. Now we've actually hit the bottom one already, that 35. Today's high was actually, you can see there, 35.4. So some of the traders have gotten short, but I still think we'll probably get another chance at this one, but it is a 1240 to 1235 zone. And you'll notice, where is it built from? Very objective levels. The Darvis, which is actually reflecting a previous high. What I love about the Darvis, and this is another thing that I'll, take note of. The previous Darvis low right there and the previous Darvis high here are creating what I like to call a common level. And the reason I call it a common level is just kind of, I don't even know if that's really a thing. I call it a common level because it's something that tells me that the bulls and the bears have something in common. What was once support is now resistance, right? Everyone knows that from, chart reading 101. What was once support becomes resistance. The bulls or the buyers have something now in common with the sellers or the bears. Love levels like that. That tells me a price or a price zone means something to both sides kind of the trade. Okay, so that's gold. Moving on then to wheat. Gosh, a lot of questions on wheat. Wheat finally pulled back to a level that has my interest. It's a 618, so I've got a golden mean. It's at basically 507. I've got a 505 level in there. We're hovering just above the 500 major psychological level. I've got the 34 EMA up in there too. Okay, now the thing here is, some of you asked, Raghee, you going to buy the Darvis low? And I said, no, it's too shallow a retracement and too volatile a market. It did work for maybe a second, but it's too aggressive. And this idea that we should be buying shallow corrections after just a launch, I won't even call this an uptrend, really. I mean, we were already trending higher, thank you green grab candles, and a 12 to 2 o'clock angle of the wave, but this was just a rocket ship taking off. And that's really not, to me, a healthy trend, okay? Healthy trends correct. This is the correction, okay? So this is an acceleration within the context of the trend, but my trust is going to be super low, which is why up in this area, when I said it worked for about a second, I meant we were actually better off trading intraday in all this, in this slop up here, than we were doing something on the daily time frame. Now I'm interested in something on the daily, and that is wheat. Okay, finally, beans. What's interesting about beans is beans and bean meal are really interesting to me right now. It's a little bonus symbol thrown up in there. Here is another correction, very much like the wheat market we just talked about. And then here's bean meal, very similar situation. I've got a nice retracement. I've got my wave in play. I've got the 320 level that I'm hovering just above. So, and previous support after this sell-off right there, that was a low at 324.4. So I do like this. And 50% retracements, while they are Fibonacci, forget the Fibonacci for a moment. A lot of people just say, look, that halfway mark is just a very valid level to watch in any kind of range, whether that be a sideways range. I call it the midpoint in chop. It's usually one of my profit targets if I'm playing sideways price action. You know, expecting a channel to go to support to resistance, to floor to ceiling is really a misnomer. You really want that midpoint as a profit target. So that 50% has a lot of validity across any kind of high to low range, and it's definitely in play here. So this is a level that I'm watching to get long in, not only in beans, but bean meal. Hope you enjoyed this recap video, and I'll see you in the next update.